Welcome back. You're watching our special broadcast of the South African Reserve Bank's last Monetary Policy Committee meeting of the year, at which Governor Lesetja Kganyago and his fellow governors unanimously delivered a 25 basis point cut in the repo rate of South Africa. Let's say this was expected by the markets, and it's also reflected in the assets of South Africa. The rand at the moment 18.06 against the US dollar, pretty much where it was as the governor began speaking and delivering his address. On the equities front, we're also seeing little movement, just a nudge up really, 0.5% versus 1/3% higher earlier. And the party is certainly going on in the retail space. Earlier, we had Mr. Price leading that charge. At the moment, now up 7.6%. Mr. Price reminding you, coming in and reporting higher numbers and also reporting that they've been able to maintain their market share. So together with that rate cut, certainly the market loving that. So we also have higher SPAR, Pick and Pay, Truworths, Woolies, THG, ShopRite. Indeed, those are your retail shares, showing where the interest lies in the market. All right, let's get the views of the experts. We've been watching the governor and have been making up their minds about what it means potentially when the governor and his team comes back on January 30. Let me introduce them. Beginning in the studio here with me is Ricardo Smith, Chief Investment Officer, ABSA Investment. Ricardo, thank you for making time. We're also being joined on this panel by Carmen, Head of Multi-Asset Strategy, Terebinth Capital, who joins us online. Thank you, Carmen, for coming through and sharing your insights. And Goolam, Ballim, Chief Economist, Standard Bank Group, who joins us also online. Goolam, let me start with you. Your thoughts in respect to the message that came with the 25 basis point cut from the governor.
Godfrey, it doesn't come as a surprise. The Reserve Bank has sufficiently telegraphed that it will remain orthodox in its overall posture in an environment where there are still multiple inflation risks, both external and idiosyncratic. And it all comes against the backdrop of an intent to, at some point, even if not imminent, lower the inflation target band. And with that backdrop, the Reserve Bank would want to maintain a guide stone where in due course inflation is going to be lower as a function of the Reserve Bank's monetary policy. So you could argue there's a secondary contextual dimension that probably infuses itself in the Reserve Bank's decision making. Indeed.
Carmen, let me come to you. Your initial thoughts in respect to what you heard from the governor. Given he delivered what we expected, maybe we should focus on the message, right?
Yes, certainly. I think the message was one of caution. There is a lot of uncertainty that remains, and I think the election outcome in the US will ensure that the uncertainty, at least in the near term, actually increases. So you can't move aggressively unless you actually know, rather than speculate about what Trump and his new administration will actually do in terms of the various policies, in particular, things like trade tariffs, which we know might be inflationary in the US, but certainly disruptive in terms of the global economy. What was interesting is that a lot of the risks that were cited towards the latter part of the speech were very much homegrown. So it's wages, medical aid, electricity tariffs, water tariffs, and it's really only food inflation that we can argue is the global direct threat to inflation. But I think in keeping with sort of the orthodox approach is that a 25 move was cautious and just reflects the various trade-offs.
Ricardo, you were in, you listened to him, and pretty much as we expected. But again, I want to concentrate on the message that accompanied the 25 basis points cut.
I know for sure. So decision in line with expectation. Some positives, around the risk to the outlook being assessed to be balanced. In previous meetings, he has stated that there was more upside than downside risk to the inflation outlook. Positive that the forecast is still expected to be within the 4.5% target. concerns around global uncertainty, concerns around electricity, concerns around, a lot of some of the local elements. The starting point of the rand, that they put forward is more or less where the rand is, slightly lower, but nothing much in it. So there is some positivity to take out of this, and it did highlight that this time around, a 50 basis points was at least discussed, whereas in previous meetings it wasn't. So some positivity, although the 25 was expected from a cautious perspective.
Absolutely. So I guess then the next question then becomes, can we glean anything out of what the governor said today and the decision that they took about the path forward in terms of how deep the cutting cycle is likely to be, or how narrow that cutting cycle is likely to be?
So he made a comment around the quarterly projection model where they're seeing the repo stabilize at around 7%, which would imply, another 75 basis points. However, he did emphatically state that they're not committing to any path, and they'll, take it from meeting to meeting. So no commitments, but some indication of where we could go. One concern is that there's been some negative surprises across the globe, and the natural rate of interest rates across the globe is a bit more elevated, which means we ourselves should expect a slightly more elevated than we've seen.
Absolutely. Let me back up your statement on his saying this is the quarterly projection model, which we know the governor always disclaims and says, yes, it's a guide, but we make our decisions. I'm quoting him here directly. The MPC would like to emphasize its decisions will be made on a meeting-by-meeting basis with no forward guidance and no pre-commitment to any specific rate cut, even though the QPM is giving us guidance and some kind of direction. Goolam, I wanted to know if you have in any way changed the view of Standard Bank as to the depth or the narrowness of the rate cutting cycle.
For the moment, we will cling to another 25 basis points worth of rate cuts in the first half of next year. And we don't think there's anything new in the data that really alters our perspective. For that matter, what I could just add is we've already recognized we are in an entirely new geopolitical era from, say, the last decade and the last 30 years. If we look just, if I may, to note that since 2002, and even prior to the US elections, which would mean about 33 elections around the world over that roughly near 3-year period, and at least 50% of elections the ruling party lost. And of course, that was again echoed in the United States, where the ruling party, the Democrats, were dethroned. And the point I'm making is that that does then tilt towards a suggestion of policy variability, new policies entering the fray. Now, that in itself does augur a little poorly in the sense that it suggests there's going to be volatility, uncertainty. But as much as that may be the case, it is perhaps why we have 2, or at least a cumulative 50 basis points anticipated, rather than something more wild, more extended, more substantial.
It looks like we just lost Goolam there. I'm hoping we'll be able to get him back. Carmen, let me come to you. And I want to know from your perspective as well, whether you're also in agreement with the gentleman that what we heard from the governor does not in any way suggest an altering of the outlook for that rate path.
Yes, so certainly if you look at what the market in terms of the forward rate agreements are pricing, they're also not convinced that we will necessarily get a cut at each meeting. So effectively, we can expect one cut.
It looks like.
Or okay. July. That would leave the trough at 7.25, which is slightly above neutral. And I think what this highlights in terms of the market pricing is the tension between the domestic economy, which certainly can still use some stimulus. So yes, growth is picking up, but it won't hurt to have a bit of a boost in terms of the monetary policy side, versus then offshore, we have elevated uncertainty and a potential regime shift in terms of the level of global rates. So you have seen a reversal in the likes of sort of Eurozone bond yields, US bond yields, and that is a potential pressure point that could offset the better domestic reform and growth outlook.
So my next question is going to be around the inflation picture that we have seen here in South Africa. Carmen, if I can stay with you. We saw inflation falling to the lowest since June 2020, but crucially outside of that target range. And we know how monetary policy authorities react to when you have inflation outside of the target range. When it's on the upper side, they clamp down on us. Is it unreasonable to expect that when it's outside on the bottom side, they also accommodate us? Is the governor being too cautious?
Oh, I wish the reaction function were symmetric, but it's not. We do know that certainly under Governor Kganyago, it has been a relatively conservative MPC, and there's been a preference for a steadily lower inflation target. So he did say that you cannot, in secret, move to a low inflation target because it will be sort of wasteful, because then you're not able to influence inflation expectations. They have been vocal about their preference. So the fact that we're below 3%, I don't think is a reason to cut aggressively that sort of in and of itself, because it will be temporary. And he did actually highlight the reasons for the 2.8% print are viewed as being temporary, but rather than that you should see the caution in terms of the preference over time to move sort of instead of a 3 to 6 to factor in something below 4.5. So I'm not necessarily saying to 3, but you can see a conservatism creeping in there. Whether it's the right time to do it, I think it is a question mark, because we know globally a lot of economies are still not at their inflation targets. Across LATAM, still well above, developed markets at or slightly above. So in that sense, you will not have that significant easing that you would expect, because we now have 2.8% inflation, which probably will not last.
Yeah. Ricardo, do you share this doubt of the 2.8% inflation being the bottom? Sorry, not being the bottom, but being a temporary drop that we have seen here, i.e. this will not be sustained, and therefore we can justify the caution in the governor's stance and speech.
Yeah, look, I don't think we can sustain 2.8. I mean, if you look at core inflation, it is closer to 4%, which, is the more steadier measure. However, I mean, at 3.9 odd %, that's still a healthy place.
Sure.
And one of the selling points, of course, the one selling point of having lower inflation sustained is price stability. But another selling point is that over the long term, interest rate correlation should be positive. And so we should start to see some benefit from a monetary policy perspective. So in the short term, happy for the caution, but if we do sustain levels below 4.5 and expectations are firmly anchored somewhere there, we would certainly want a much lower natural rate.
So one of the questions that we got from one of our guests earlier on in Power Lunch when we were discussing this upcoming meeting was around the governor's desire for a lower inflation. He has expressed it publicly. The minister has come back and said he's not convinced, and the discussions are still ongoing. But the question that our guest wanted to pose was, are we seeing monetary policy being conducted for a 3% or thereabouts inflation target versus the desired one expressed by the Monetary Policy Committee of 4.5% and the legislated 3.6% range?
Yeah, so I think the range of 3 to 6 is wide.
Right.
So anyone who comes in and picks a number there, they are technically still within the policy target.
Okay.
So it becomes a bit tricky. Maybe that range in itself could be debated to say, do we want to target a slightly narrower range? Of course, the difficulty is a lot of our inflation is imported and the rand is quite volatile.
Sure.
But that range has been very interesting because each governor comes with a number within the range.
Yes, it's good for his legacy as well.
It is.
Absolutely, because when we write about the governor, when he's gone, we will say he's the guy who brought inflation structurally down in South Africa. Goolam, I understand you are back. I wanted to give you an opportunity to finish your thought, but I also wanted you to contribute to the question around whether the 2.8% inflation that we saw is the bottom, and if the governor's caution is warranted, given many people are suggesting this is a temporary hit.
Godfrey, we've been here before. We have certainly been in a situation where the inflation rate has printed around about 3% or lower. And this is not the natural, this is not the organic level of inflation, which is probably closer to 4.5%, maybe even straddling 4.5% and 5%. We need to break the back of inflation expectations and particularly wage setting, which tends to be closer to 5% and sometimes higher. And when that happens, we can then talk more discernibly about inflation trending to the lower half of the current 3 to 6% target zone more assertively and certainly more sticky at that particular level. So it's fleeting, largely attributed to fuel prices. So it's a progressive process. And I guess the sweet spot for the governor is around 2%. I don't think that's going to be achievable over the next 2 to 3 years, but the governor, as you noted, would want to set an inflation target that is at least progressively lower, and then that would cement, a 15-year legacy up until 2029, where he has helped South Africa lower inflation, with the idea that that's healthy for long-term economic growth.
Absolutely. What would you say to this contention that the monetary policy conduct that we are seeing is designed to bring inflation below the official target range, which is 3 to 6%, and also the desired or the governor's expressed target of 4.5%?
Godfrey, one of the things that I've suggested respectfully to the Reserve Bank is that we must be careful from a timing point of view. In other words, while certainly the desire for lower inflation under the auspices of a lower inflation target is welcome, South Africa's political economy is at a very fragile state. In other words, we need, for the moment, the GNU, the Government of National Unity, to solidify, to consolidate. And we need it to begin to deliver results so that that provides impetus for growth. In other words, the GNU is critical and requires all manner of tailwinds to be able to buttress South Africa's growth rate, which in turn will solidify the GNU's legitimacy, its credibility, and its existence. If we were to consider that if growth were for whatever reason imperiled, it begins to undermine the Government of National Unity, and it then opens the door for other parties such as the EFF, even though it seems to be self-imploding, but even the MKP from then asserting populist policies. So in short, what we're suggesting is that it would be an own goal if we too soon pursue a tight monetary policy stance in tandem with a new lower inflation target that has a growth sacrifice that is not just a cost in terms of output foregone, but also political capital foregone in terms of the GNU, that, as I've suggested, perhaps open space for populist opposition to enter the fray. So my feeling is that the Reserve Bank is socializing, and the governor in particular is introducing this notion of an inflation target that will in due course come to pass, and certainly the National Treasury will have to warm to it. I don't think they're there just yet, and therefore I think this is perhaps a year to 2 years out from where we are now in terms of actual adoption, but it's a process that we will incrementally journey toward.
Yeah, you touch on a story that actually I've wanted to explore, and I'm hoping that you'll be able to join us at some stage to talk about that story. And this is the cost of lowering that inflation target to the wider economy. But let me talk a little bit to Ricardo's book here and Carmen a little bit. So we have seen the 25 basis points delivered. We have seen the retailers having a party. Does that change the strategy going into 2025 in respect to the broader markets?
Yeah, I think a lot of the markets that are seeing some tailwinds from lower interest rates, as well as stable energy supply two-pot system, so better disposable spending, are mainly the banking sector and the retail sector. And we've started to see those shares rallying quite nicely. And the forward guidance as well on earnings growth has been quite positive. A lot of double-digit earnings growth being expected. Even though this year we've seen very moderate growth, the returns on those shares are starting to come to the fore. So that would certainly suggest that a lot of the value is being unlocked, certainly in markets. There is a couple of quarters that it lags to actually have quite a bit of economic impact on our pocket, particularly as these rate cuts are a bit gradual. Right. But we are trending in the right direction. There is quite a few tailwinds on our side.
So in terms of strategy, no change?
From our perspective, no big changes, but we are closely looking at the dynamics between local fixed income and local equity.
Absolutely. And that's interesting because also globally, the other story that's been coming out, unfortunately we don't have time to explore it, is this whole idea that the red path for the US Federal Reserve is going to change with Donald Trump in the White House. And who knows what potentially he could do, even though Jay Powell has said, I am going nowhere. Carmen, your thoughts in terms of strategy, again, as a result of this decision? By the way, the rand is back to 18.
Yes, I do think by and large, that your sort of call it shorter term 12-month strategy is really about what you think will happen cyclically. And we're starting to see that with the rate cuts, low inflation, a bit of the two-pot system stimulus coming through. And that would mean that you need to have probably a bit of a home bias, particularly now that the rand did go above 18. But the big sort of value unlock will come if we can have conviction on the structural tailwinds. And there is a bit of a question mark. So we did see that business confidence released yesterday picked up quite nicely, still below 50, but let's say high relative to what we've become used to. And that sort of then becomes important because you want to have the pickup in sentiment and confidence we're seeing now to be followed through by actual reform. And then I think some of that residual skepticism on the part of particularly foreign investors as well as then corporates, that will then fall away, and then you can get a more sustainable re-rating. So I think certainly for SA equities, for now it's really an EPS story, which is quite solid. You've had sort of a re-rating up and down, so there has been some volatility, but there is potential meaningful upside in terms of the longer term rating if we can implement the reform successfully.
Let's hope so. Let's hope so. It's not a big if. That's the nice thing these days, right? Because we always used to say it's a big if the government is able to do so. We're rounding up. Carmen, I wanted to talk about January 30. What are you expecting?
So I think the foreign backdrop will dictate whether we get a cut or not. I think for now we can be reasonably certain of a 25 basis point cut. I think given the fact that the Reserve Bank did not cut by 50 today, with inflation sitting at 2.8, tells you that they are not willing to move in increments of 50, at least when they're easing rates. Obviously, at times when they're hiking, it's somewhat different, but I would say 25 basis points is a high probability still for the January MPC meeting.
Goolam, January 30?
We're all sufficiently cloaked in Governor Kganyago's conservatism. We've had him for a while. And so I think 25 basis points vanilla action would be our call for the moment.
Sure. And we also know, of course, when January 30 happens, Donald Trump will be sitting squarely inside the White House. We still don't know who his treasury pick is, but certainly we hope that we'll have a clear idea by then. Ricardo?
Similar. I think 25 basis points is likely to be a steady ride until we reach their final target.
Correct.
Look, it's the path that we're down. We are an emerging market economy. It is liquidly traded, so there is some caution that we need, particularly in the short term. But longer term, we certainly would like to see a bit more. We don't think we're going to see that next year, but we would like to see better rates going forward.
Ricardo, you're sounding as cautious as the governor. Thank you very much for your time. Let me also thank my other panelists, Goolam, Ballim, Chief Economist at Standard Bank Group. Thank you, sir, for your time. Carmen, Head of Multi-Asset Strategy at Terebinth Capital. Ma'am, thank you for your time as well. So as we bow out, we can report that there's certainly been an improvement in sentiment following that cut, because on the all-share index, we are now double where we were when we began the program, when the governor started speaking. So this is about 1/3% that was there. Now, 0.6% higher on the all-share index. As I said earlier, that party being led by the retailers. Then on the dollar rand, we are looking there, as we reported earlier there, very clear pattern of strength below 18 against the US dollar following that decision. Thank you for watching this special broadcast. Until next time, goodbye.